I'm building a seven-figure a year real estate business, and I'm doing it entirely in public on this channel with daily updates so that you can see my progress and see what I'm doing, the ups, the downs, how we solve problems, and by extension, how you can do some of the same things in your life and your business so that you can get all the things that you want by having a real estate business that is creating what we call 3x freedom. That's time freedom, location freedom, and financial freedom. With all three of these, you can do what you want, when you want, and with whom you want. So we're going to start off by answering some questions. We can answer these in the Skool community or on a YouTube channel. So if you're watching this, go ahead and ask a question in the YouTube channel below, and then the next day I'll go through and answer the questions from top to bottom. So we'll start off by jumping over here to the Skool community called Commercial Real Estate 101. Come ahead and find us. The description to come join that community is in the description below. And let's find a question. So this is not really a question, but it's a deal. And this is one of the things you can do inside of our community is you can present your deals. And one of the first things I ask when someone presents a deal, that's great. I'm glad you're trying to make money. I want to know do you have the property under contract? I want to know what this person's agenda is. And it's probably pure, but I just want to confirm. What I don't want people to do is trying to resell properties that they don't have under contract or they're not the agent for. This idea of daisy chaining a deal that you don't really have a right to daisy chain is something I want to avoid. And this is why I asked this question. If they legitimately have a property under contract and they can find a buyer or a JV partner or a capital partner inside of our group, more power to them. I want them to be successful. In this case, it looks like it's a single family, which is not what we specialize in, but we don't discriminate either. So if you find a deal and you can find a buyer in here, more power to you. All right, another kind of public service announcement here. It's kind of cool. Heather is offering to build 2 free websites for people who are founders, which I love using this term as a marketing strategy. Is I basically will give you this special status, which is you're a founding member or a founding community member or a founding client. And so what she's doing is she's raising and finding people to work with. And she's going to do it for free, and she's going to do it for 2 people first. And we're very careful about people just slinging out promos inside of our group, but I kind of like what she's doing here. And she's offering to build a website, and she'll do 2 free custom websites for members who have noteworthy projects to showcase. So she's going to actually, experiment with some people. So I think a couple people here could get a decent website built and test her out for free, and she can build her client base. And it's very common for real estate investors to want or need a new website. I'll actually update you on my status of our website here in a minute. All right, so here's a question about due diligence period. So Anthony asks, I know you need to get a property inspection and appraisal, but is there anything else that should be completed when you're doing a commercial property? And so my answer here was that yes, there are some additional things in the commercial space that you might need to get. One of those is a phase 1 environmental study, which is typically from like an engineer type of person, and they're not terribly expensive. The phase 1, if they need to do a phase 2, it can get quite a bit more expensive. So they do a phase 1 to see if they need to do a phase 2. So they're looking at things like, is the ground been saturated with gasoline, or is like that sort of stuff. So environmental type of issues. And oftentimes it's the bank, the lender, who is requiring this. If you're just doing owner financing and you don't have any reason to suspect that it really truly needs an environmental study, then you don't have to get one if you don't want to. It may not be a bad idea to go ahead and do a phase 1 just for your own peace of mind, to know that there's not a really concern. Because one time I did buy a property that had a pretty alarming outcome with the environmental that I was not expecting at all, and I didn't do it ahead of time. And now I'm always kind of like, okay, we should really pay for these phase 1 environmentals just for peace of mind. Okay, so here's an 8-unit deal in Columbus, Ohio. That's near Ohio State. And I'm going to give a little commentary. He does ask some questions here, but I want to give a little bit of a commentary on what he's doing here. So I don't know where he's gotten his information, but it looks like he's already trying to pitch the deal, and he hasn't gotten it under contract yet. And so you notice that one of the first things I ask is, do you have this property under contract, or are you the listing agent? And his answer is no and no, but I'm the only one the owner is talking to, which is fine. And we have been exchanging information, and he needs funding to take it down, or he wants an interested buyer to assign the contract to. So basically he's trying to do a deal. So he's doing nothing wrong. I would just go about this differently. So he's presenting it as though he has this deal. Why this deal stands out. I mean, you don't know any of this yet. Like, you haven't negotiated the actual purchase price or the financing terms. And he says, asking structure, owner will drop and swap or partial owner finance, which is, I don't really even know what they mean by that. So what I would say is, you you as a deal finder, you want to dig a little deeper and actually get something negotiated. And if you need help, come to our community and ask for help and say, hey, I have this deal. It's this generic 8-unit deal in Columbus, Ohio, and you don't need to do all this salesmanship of it. Like, that doesn't matter. What are the financials? Does this make money? Is the seller flexible? Do you have anything of merit here? And he says he got some good information about the financing note. So he has the information he needs, I think, in order to do his financial analysis, but he didn't do the financial analysis. He went here trying to raise money on a deal that he hasn't done any work on. And so I would just counsel you that when you're trying to find deals, which is what we're trying to learn how to do, is actually have a conversation and negotiate a good deal. And so he got some feedback here, and he then did go ahead and provide some financials. And then we look into the financials and we find out that a lot of the income is from Airbnb, which is a whole different scenario. And you would just go about and analyzing it a little bit differently. All right, here's a deal from Charles that he has an RV park and he's negotiated an owner financing scenario. And his question is, it's a pretty big down payment, like it's 47%. We're usually trying to get under 20%, but the purchase price here is pretty low at 500 grand. So it's still probably not terrible. But the owner finance amount is enough that you're going to limit your buyer pool. So in principle, when you're trying to do owner financing, the down payment is you want to get in as light as possible, because the less money down you need, the more buyer pools you have, the more capital partners you'll be able to raise, and just easier to find smaller amounts of money than bigger amounts of money. That's intuitive. So you want to negotiate as little as possible. And so it makes your cash on cash return even easier. But in this case, the cash on cash return still works out to be 28%, which is pretty high. But I suspect in reality, it's not really that good, because there's no vacancy rate factored in here. And so I'm assuming assuming a very low vacancy rate, like the 5% or less. And in reality, RV parks tend to be seasonal, and you'll have periods of time where you'll have 30 to 40% vacancy because it's this winter time. It's December or January, it's Christmas, it's holidays, whatever. And people aren't staying in RV pads or using RV pads and living in RVs as much during that time of year. It kind of depends on where it is. He didn't say, but it can be very regional specific, and we just don't have that much information here. But it's still something worth digging into. Like, I would not shut this down just because this is what they agreed to. I would just want to know more to see if this number is real or not. But I think you could find a buyer for a 17 pad RV park, but they would need to have, close to 300 grand of money within the first year, 215 plus closing cost up front, and then another 50 grand in repairs. I'm assuming that's what this is, which is probably a good idea to just have reserves for repairs or to make some improvements to the property. He doesn't go into if that's required or not. But he just doesn't know the vacancy rate, and so he wants to dig in. All right, that's questions answered. And so now we're going to go into building and strategizing in public about how I'm running my business. I mentioned my website before. Work has begun. First draft of that is due today. So over this weekend, I'll be able to have a chance to review the first draft and see if there's any changes I want to make. And once I see it, I'll probably get some ideas as to some changes I want to make. But I'm really excited to see the outcome of this and potentially show it to you guys soon. So that's the website. And we are working on this RV park, the 70 unit. We have somebody who has expressed a lot of interest to join us as a capital partner, and we're waiting on a quote from the title company. And so we're having a conversation with this new capital partner today to figure out the details of what they're prepared to do and if it makes sense for what our goals are. And we've probably talked to 10 or 12 people. About half of them kind of fizzled. Another 4 or 5 said that they would like it, except for they just didn't like this particular situation. And so we found a buyer, capital partner type of financial partner that we're going to talk about our structure. That's what the point of the meeting is how do you want to structure this? Do we want a JV on it? Do you just want to buy us out? Let's just figure out what makes sense for you on this contract, because we've expressed very clearly that we are not RV park operators, and we are not pretending to be. And we do not want to be somebody who is managing an RV park on the day-to-day, because that is not our strength. Okay, that's that taken care of. And we also have this deal that Tate has, this 8-unit in Louisiana. He has confirmed that the PSA has been signed as of this morning, so that's good news. And he is trying to find a buyer. And his intent on this is to wholesale it. And it's a good enough deal that I may just come in and be a part of it. And so it just depends on whether or not if he can find his buyer, then more power to him. If he wants to partner with me, I'm willing to do so, but we would have to just talk that out. So in this case, I might be the capital partner. Okay, good deal. It's the 8 unit in Louisiana. And we also now have this 50 unit RV park where this is what I would refer to as a difficult dance partner. They keep stepping on our feet. And so at this point, we're at the position where we're like, hey, we'll continue to find capital partners for this, but you're making it difficult for us to do so. They won't give us the financial documents. They're really being funny about signing the PSA. And we just kind of go round and round with them, basically arm wrestling us to make it hard for us. And I mean, we've been very forthright about this whole thing. We are raising capital, and we do not have liquid $500,000 cash in a bank waiting for this opportunity to pop up. When opportunities pop up, we then bring our capital partners to bear to see which one matches and makes sense, and then we'll buy the property from them. But they're not making that easy. And lastly, I am selling one of my properties today. We have a scheduled closing as of just a few minutes from now. So when I wrap this up, my wife and I will actually go to the closing and we'll sign the documents, and we'll have one less single family property in Central Arkansas. And then I actually did a walkthrough yesterday of a property that I'll actually show some pictures here on the screen. A property that just got finished rehab. It's a B minus C plus area. Pretty nice house, actually. And the neighborhood's not too bad. It's certainly working class. And I'm going to list it for $175,000. It's a 3-bedroom, 1-bath, charming little house, actually. And I met the neighbor, and the neighbor had a very interesting scenario. This is happening a lot, and I want you to pay attention. So there is a tree in the backyard of this rental property that it seems to be in good shape, but it's kind of has a branch that has grown over the fence and is hanging over the neighbor's roof. And their insurance company has contacted them and said, based on this tree being here, we will not insure you anymore unless you get it cut down. And so is that my obligation to cut down my tree that's over her yard for her insurance? Because my insurance doesn't have a problem with it. It's definitely hanging over my roof big time. And so I'm not really sure what the rules are. So I looked it up, and from what I can tell, in the state of Arkansas where I live, I have no obligation to cut that down. But it is my tree that's hanging over her yard, but it's her insurance company that's being weird, not mine. And so I don't know kind of how to handle this. And so I've had this happen to my own personal house. Same situation. My neighbor's tree was growing over towards our house, and our insurance company said, we will not insure you anymore unless you cut back those trees. And so I paid for having those trees cut back. And so I went to the fence line and just cut straight up. And it kind of made the tree look weird, but I have the legal right to cut straight up from my fence. But so it becomes a kind of peculiar situation, and this expense could be pretty high. So what I'm doing is I'm getting a quote. I'm going to see what the quote is. I'm going to go talk to the owner of the neighbor and see what to do. So I might offer to split it with it, but from what I can tell, I have no legal obligation to do anything about it. It's her insurance, and if she wants the insurance satisfied for, she can pay for somebody to do it. I'm trying to find a really affordable arborist or a tree guy to take care of it, so maybe it's not too expensive, not a big deal. But this could be several $1,000s that may not be a practical thing for her to cover. All right, now jumping back over here, well, let's check on some stats. I actually forgot to do this yesterday, so I went through and did this off camera for yesterday. And so for now, I'll do it right here. The long form main channel, I got a couple of new subscribers there. So that's 1,068. This channel actually grew quite a bit yesterday, and I haven't, which is weird because I haven't posted anything on this channel in a couple of weeks, but that one grew 313. So I kind of wonder if maybe doing this daily coffee with Paul affects subscriptions on the main channel or not. I'm not really sure. So let's check Instagram. I think it's still the same. Yeah, 1424, still the same. Go find me on Instagram at Paul David Thompson. And the Skool community has grown quite a bit. There's been a lot of growth over here lately. Members, we're about to break 3,200. So we're at 3,198. So a big jump from yesterday, 3,198. So we're seeing the Skool community grow quite a bit. I can't tell how much of that is from what I'm doing here versus just an organic growth of Skool. Either way, if you're watching this, you're not already in a Skool community, the description is in the link below. And I look forward to seeing you on an update tomorrow.